Donald Trump's 1% rate cut plan. Good for growth or retirement disaster? 10 million retirees already saw their savings shrink last year. Now, Trump's 1% rate cut plan could be the final blow, or the surprise solution. Welcome to Eli's USA, your daily guide to retirement, Social Security, and America's financial future. Let's get into it.
What is Trump's 1% rate cut plan? Let's start with the basics. Donald Trump has hinted at a 1% Federal Reserve rate cut if he returns to office, possibly pushing rates back toward near zero levels. That means borrowing would become cheaper, mortgage and car loan interest could fall, and businesses may have easier access to credit. Sounds great, right? But for retirees, it's a different story.
The problem for retirees. 2025 update. Right now, in 2025, millions of retirees still depend heavily on interest income from savings accounts, CDs, money market funds, and bonds. But here's the problem. In mid-2025, the average one-year CD rate is around 4.5%, already down from early 2024 highs of 5.2%. If Trump's plan cuts rates by another 1%, those yields could fall closer to 3.5% or even lower. For retirees, that's a serious income loss. Even a 1% drop in interest could mean losing thousands of dollars a year in passive income, at a time when every dollar counts, especially for those living on a fixed Social Security check.
Could this trigger a retirement disaster? A retiree with $250,000 in savings earning 4.5% right now makes $11,250 per year. If the rate drops to 3.5%, that falls to $8,650, a direct $2,500 loss annually. And this doesn't even factor in inflation. Now add this. Healthcare costs are up 5.8% in 2025, driven by medication prices and aging demand. Food prices rose nearly 3% year over year. Medicare premiums have jumped again, squeezing retiree budgets even further. So yes, if Trump's plan isn't balanced with safeguards for seniors, this could absolutely become a retirement disaster.
The economic argument for the rate cut. 2025 framing. To be fair, Trump and his advisors argue that a 1% rate cut would boost business expansion, stimulate consumer spending, prevent an early 2026 recession, which some economists are already predicting. Lower rates usually mean cheaper loans, more housing activity, and stock market optimism. In theory, that's good for the broader economy. But again, the big question remains, will this help everyday Americans, or just the top 1%? And what happens to those on fixed incomes while the rich borrow and grow?
Who wins? Who loses? 2025. Breakdown winners in 2025. Corporations needing cheap capital, wealthy investors, younger Americans with mortgages, credit card debt, or student loans. Losers. Retirees depending on interest-based income, middle-income seniors who rely on CDs, bonds, and annuities, pension funds and Social Security projections, which earn less from U.S. Treasuries when rates fall. Even the Social Security Trust Fund, which collects interest on its reserves, will earn less if this cut goes through. That could weaken Social Security just when more boomers are retiring.
What you can do. 2025 smart actions. If you're already retired, or within 10 years of retiring, 2025 is a crucial year to make smart financial moves. Diversify beyond CDs and savings accounts. Consider dividend stocks, real estate funds, or annuities with inflation riders. Research inflation-protected bonds, like TIPS, which adjust with CPI. Follow the Federal Reserve's decisions closely, especially as the election heats up, and, most importantly, stay informed. Because policies are changing faster than ever before.
My suggestions. Trump's 1% rate cut plan could do two things: fuel economic momentum and prevent a slowdown, or wipe out crucial retirement income for millions of seniors. It's not just an economic debate anymore. It's personal. It's generational. It's about your future. If you're 55 or older, this plan could decide whether your retirement is secure or slipping away.